Welcome to the show. We are going live. Clear path to cash hotline with Cash Flow Mike.
I'm recording. All right. Hey, welcome to the Cash Flow Mike Hotline. And this week, here's what we're going to do. Something different, something I've never done. I'm going to do like a Dave Ramsey style call-in type show where you come with your scenarios, with your situations, with things that are happening in your business, and I walk you through what to do next, right? What to do next. And I'll walk you through all the steps that I use in the Clear Path to Cash system, starting with asking the questions, ending with what tools we're going to use to go to the next step. So you get to see the system that I teach in practice, in real life. Does it make sense? We're all good? All right. So I apologize for oh, look at Susie came. Hey, Susie, what's up? So, all right. So let's start with this. Hey, who wants to go first? Who's got a question? I don't know if this is going to be 30 minutes. I don't know if it's going to be 45 minutes, an hour. We're going to go until people get their questions answered. So who wants to go first? Is it Jeff? You want to kick us off?
Yeah, absolutely. And for everyone else, if you'll, when you're ready, if you'll do the hand raise feature, that way we can control the flow. But Mike, I had a good one here to kick us off. I can see where a client is losing money, but I struggle to explain it without sounding like I'm lecturing them. How can I have that conversation without losing trust?
All right, so let's role play it, right? Let's role play it. You be the client and I'll be the advisor. And I think that's probably one of the better ways to teach is to just do it. And you can see the flow and see how it works. So are you good with that? You kind of know the client. I'm going to assume you know a little bit about them.
I had I had some folks submit these questions in, but I'm sure we can ad lib it in. I'm not familiar with the situation. I just had I had someone that had submitted me a handful of questions that what I did was I went to some folks that I work with and just said, this is what we're doing. I'd love to have some questions that they were not able to attend live. So that's where the questions I got came from.
Do your best pretending then.
Yes.
All right. So here's what I want you guys to do. If you're just listening and you hear me use one of the techniques that I teach, put it in chat. So everybody goes, oh, he just did that. Oh, he just did that. So if you hear something that you know that I'm using, because I'm not going to stop like I normally do during training and saying, here's what I did and here's what it sounds like. I'm just going to play it all the way through. You guys ready? Hey, Jeff, let's pretend that we've already done all the warm-up stuff. How's your kids, those type of things. And this is a new client or this is an ongoing client because I start in a different spot.
Let's just go with it's a new client, someone that I don't have that rapport with or what have you.
Hey, all right, Jeff. Hey, I'm glad that we finally got together, right? We put this on the calendar. I was looking forward to this. How do you think I could help? What was you hoping I could do?
Well, the biggest thing, Mike, I can tell you is I don't know where all my money's going. I'm starting to run out of money before I run out of month, and I'm seems like should be making money. But I just don't know where it's going.
Right. Yeah. That common problem, right? That's why people come to Cash Flow Mike. It's one of those things. But here's what I'm thinking, right? You've got to where you're running out of money. I don't know if it's a profit problem. I don't know if it's a cash flow problem. So, hey, tell me more. When you say you don't have enough money, is that, how are sales? How's your bank account? Tell me more about what that means to you.
So our sales seem to be doing well. Just by the time that last period of payroll comes up, we're starting to run shy on being able to make that. But our sales have been strong. Our by all accounts, everything should be moving in the right direction. It's just by the time that next payroll comes along, I'm struggling to meet that.
Yeah, see, common problem because what we're looking at is I like the fact that you said the sales are strong, and I like the fact that you got some money coming in, but maybe it's a timing issue. And I've got this technique I call mining your business for hidden cash. So we can just kind of check in and kind of see if maybe there's some cash leaking out. And maybe I can give you some advice right now about what to do next. You okay with that?
Yeah, absolutely.
All right, so I'm gonna share my screen. Jeff, if you don't have the numbers, you can
Yep.
just make them up if you want to. If you
Or you
have,
can use one of the demos. Yep, whatever you like to do there.
or if you just want me to use some demo numbers, because I know this isn't your question. So you want me to just use the demo numbers?
That works. Yep.
Cool. All right, so what I'm going to do is I've got this app, right, called the Clear Path to Cash. And in this app, it kind of helps me point out, where things are happening or what's happening in your business. So let me open that up. And Jeff, can you see the screen?
I can see it.
All right, let me go right here to the Clear Path to Cash. And I'll log back in because I think it's been off for a little bit. So Jeff, I'm going to pretend that I've already put in your financial data, and we've done that, either through, typing it in or QuickBooks. And I'm going to use the technique I call mining your business for hidden cash. I don't even really need 9 numbers from you, and I would just type them in real fast. Okay. Once we got the hidden cash in, I would go to here, whatever period that we created with the financial data, I'm going to open up, and this is where it is. So Jeff, let me explain what we're looking at here. What this is a technique that I call mining your business for hidden cash. And it looks at your business a couple different ways. So many advisors out there, they'll look at the business, just in silos, like here's this ratio, here's that ratio, but that's not how business works, right? Business is always working together. Things happen together, and things happen in a cause and effect type of relationship. So I look at your business 2 different ways, right? Inside this app is a complete industry average database, right? So I'm going to compare you to other people doing the same type of work you do. And then when we put in your financial data, we came up with some goals for you, right? So if you think about the industry average, I want you to think about that it's like getting a C in business, right? You remember school, you got a C, that's average, right? And then when I think about your goals, I want you to think about that this is like getting an A or a B in business. So I'm going to look at you as at the industry average. Let's just call that, this is what you should be. It's the minimum. And then the goal is what you could be. That makes sense?
Yep.
All right. So now I'm going to just start with our goals, right? Because I can go down here to the industry, you versus industry, but let's just start with the goals and work from that. Now, let me explain how this is set up. This is 6 different calculations on one chart, right? And the 6 calculations, there's 3 cash generating activities that happen in business. Like you sell stuff and you spend money on operating expenses, and then whatever's left over is, profit, right? The other 3, like inventory, AR, AP, the other 3 are cash conversion activities. That means how long does it take for this to happen? How long does it take for money to come through the company? That makes sense? So how do we generate money, and how does money move through the company? How long does it take? That's how we're looking at it. 2 different ways at once. Now, the way I want you to read this chart is this is 0. That's our goal. So if we're trying to get 60%, if we're better than 60%, it's going to be green and above the line. If we're worse than our goal and not quite making it, it's going to be red and below the line. That makes sense?
Yep.
Now, here's the cool thing, right? You told me that, hey, Mike, we're selling, business is cranking right along, but we just don't have any money. I just feel like I don't have any. Well, I'm going to agree with you, right? I'm going to agree because right now you're leaking about 13 million. I know this is sample data, but you're leaking about $13 million out of your business. Now, don't look at that number as being, 13 million. What do you mean? Because most of it's in sales, right? This first one is about sales to assets. Now, let me explain that to you. The only reason to buy an asset, a truck, a business, a piece of equipment, or anything like that, is to generate revenue and profit. So this is a ratio that we compare across everybody. This is a ratio that says with this amount of stuff, assets, we should be generating this amount of revenue, right? Instead of guessing, saying, if I can buy a new truck, I get $1 million. Well, not if that sales to asset ratio is 2. And let me explain that. If the sales to asset ratio is 2, that means for every dollar you put into a piece of equipment, it generates $2 in revenue. So if you buy a $100,000 truck, how much should it generate in revenue?
200.
200, right? 200,000, right? So that's basically what we're talking about. Now, this is saying that you have enough stuff. I know it looks red and I know it looks bad, but this is saying that you have enough stuff to grow. This is not a, we need a new truck. This is not a, we need another location. This is, we have enough stuff. We just got to figure out how to sell more. Does that make sense? And let me tell you this, sales is the hardest one to fix. And I'm not the type of advisor that says if you sell more, you make more, right? You don't need an advisor to tell you that. I mean, that's just something that we do naturally. So let's just turn it off. We'll think about it a little bit later. We know it's there, but I'm going to turn it off. Now, when I turn it off, it kind of changes the way we look at things, right? And that's one of my beliefs is if I change the way I look at things, I see different things, right? That's basically what we're trying to do. So here, what we're looking at is 3 different areas where money is leaking out of your business, right? And to the tune right now of about $2 million, but you're doing some good things too. For instance, you're actually spending pretty well, right? When we think of operating expenses, most of the time people say, well, you know what? If we cut operating expenses, we'll make more money. That's true, but I'm here to tell you, you don't have to, right? You don't have to worry about cutting expenses, right? That's the hardest thing to do anyway, is cut expenses. We actually have enough money to even hire another salesperson if we need to solve the sales problem. Does that make sense?
Yep.
This means that you have about $1 million more that you could spend compared to your goal. That's what we're saying. So let's just turn that off because I don't want you to touch operating expense right now. The next thing is the way you're paying your bills, right? This is accounts payable. The way you're paying your bills is pretty good as well. It's not too fast. It's not too slow. Are you paying any late fees?
No.
Yeah, see, so I mean, are the vendors harassing you or telling you you're paying too late or anything like that?
Nope.
All right, so let's just keep doing that. As long as you're not in trouble, they're not beating you up on fees, those type of things. Don't worry about your accounts payable right now. Let's just turn that off. Now, Jeff, if we were playing Name That Tune, you remember that show? Name That Tune? All right. If we were playing Name That Tune, I would say I could put $3 million in your pocket in 3 moves. Right. And basically what this is saying is if we don't know where to start fixing a business, we're going to look for the longest red line and we're going to start there. Right. In this case, what's the longest red line?
Gross profit.
Yeah, it's gross profit, right? So gross profit means that one of 2 things are happening in your business. One is that we might have mispriced some things, right? We might have some things mispriced. So we're going to take a look at the way you price your goods, price your services. The other thing it could be is that we might be paying more for our goods or services. Remember how I said we're paying just a little late, and if you were in trouble with your vendors? Well, some vendors, if they know you're a late payer, will actually charge you higher prices, right? They're saying, if he's going to pay late, I'm going to charge you more. So let's just kind of, maybe we shop a few of your main items and make sure we're buying things pretty competitively. That make sense?
Yeah.
All right, so that kind of helps us from this angle. Now, we also have an inventory problem. This is saying we've got $1 million too much inventory. Does that sound right to you? Does it feel like you got too much inventory?
Yeah, the garage is full.
Garage is full, right? I mean, so here's the thing. Most people don't think that they have too much inventory. They'll open up their garage and they'll go, ta-da! Look at all my stuff. And it's good to have stuff because you always want to have something when somebody needs it, right? That's how you keep up with sales. But what this is showing us is that you have more than you need to keep up with your sales. Now, I've got this tool that we're going to go through called the Inventory Master Worksheet. And that's going to tell us for every item you got out there in the garage, how many you should have, right? It's going to tell us that when we go through that exercise. That makes sense?
It does.
All right. And then over here is the smallest of your problems. I know it's $100,000 in AR. That just says you're collecting a little slower. So we could either ignore that for now, or you can, make a few phone calls, right? That's basically, this is not a big problem to us. These other 2 are big problems. So I'm going to turn that off. We'll talk about it a little bit later. These are the 2 big problems, and there's still $3 million in 2 places in your business. One is gross profit. The other is inventory, right? Which one would you like to work on first?
Oh, the inventory is I'll follow your lead, but it seems like inventory would be just less ordering and us catching up, getting our stock down.
Yeah, here's the cool thing about the inventory problem, right? It's all I'm going to do is ask you to do nothing. We can put $1 million back in your pocket and you don't have to do anything. You know why? Because normally, hey, describe to me how you order right now. Yeah, what's the ordering process? What do you normally do? Like, we'll say it's Monday and you're going to order something. How does that work?
Yeah, so generally everything comes in every 30 days. It's automatically re-upped. So we could probably stretch that out to either to 60 days or 45.
Yeah, or you could still, keep on a weekly amount, and maybe you just order the right amount. And here's what I mean by that. Let me teach you a little calculation of how we're going to determine what's your biggest seller. What do you sell the most of?
Um, the Vest 2000.
Okay, the Vest 2000, right? So of the Vest 2000, how many do you have out there on the in the garage? The Vest. How many do you have? You can
There's
get
there's 200 out there.
200. All right. How many do you sell a month on average?
You know, it can vary depending on the type of season. We try to be stocked up for your post shows and things along those lines. It can go up, but on average, probably 75.
All right, so you sell about 75 a month. And when you order them, how long does it take to get them? Like I order it on Monday and they hit the warehouse or your shop. How long?
About Thursday.
So every week you can get it within a week.
Yeah.
So about 4 times a month. All right. So if that's the case, what is 75 divided by 4? Do you know? I mean, can you use a calculator and do that? I don't have one in front of me.
More than 15, maybe 18.
18? All right. So
I'm just guessing. It's close.
18?
Yeah, that's about right. Call it 18.
Yeah, 18.75. It's almost 19.
Okay, so there's 18, right? And how much do they cost?
They are $500 each.
All right, so 200 times 500. That's what it cost you. How much is that?
It's $1 million. That's your problem right there.
Right. So but here's the thing. You have 200 in the warehouse and you only need how many?
Yeah.
You need 18, right? So here's what I'm saying. I don't want you to order these until this number goes below that number. Make sense? So if
Yeah.
you go in there and count next week and there's 185, how many do you order?
I'm not gonna order any.
You order 0, right? Because we're going to wait until it gets to 18. If you go into the warehouse and there are 15, how many do you order?
Order 3.
Order 3 because we're getting back to 18. So this is how I want to do this. If this is the main problem, but we're going to go through all of your products and do the same type of thing. So you know this number. So when you go in there on Monday to do your ordering, you know how many you should have, and all you got to do is compare it. Does it make sense? Because what's the difference between you got 200 now, you only need 18. What's 200 minus 18?
182.
182. What's 182 times 500?
A lot.
Yeah. So we'll call it what? Is it 800 and some or 900 and some thousand?
182 times 500. No, I must have done something wrong. 182 times 500?
Yeah.
91,000? That's not right.
Larry, I gotta get the calculator out now.
That's what I came up with, 91,000.
So 200,
91,000.
182 times 500 is 91,000. All right. There you go. So 1 million was not right.
100,000 was that number.
Yeah.
Okay. All right. So, and I didn't do the math. I just trusted y'all. But 91.
That's your first mistake.
Yeah.
For the sake of the argument, 2,000 would be a better inventory number then. Yeah.
So here it is. We just took one action. It took us, what? How long did it take me to get from the beginning conversation to this? How long did it take us?
About 15 minutes.
15 minutes. We just found $91,000 in 15 minutes. And all he has to do is nothing. Right? That's what we're asking. All you have to do is you got 200 now.
Put it
Wait
down.
until you get that. So you get the money from the sales and you don't give the money away to replace it. We're just waiting. You've already spent this money. I'm going to put it back in your pocket. We just got to wait for you to sell it. And you're selling 75 a week. So if you're selling 75 a week, how long does it take us to get $91,000? 75 times 500 is how much? Or no, what do you charge for these?
$37.50, which answered your question.
No, how much?
You can say, yeah, you say you charge $1,000. That would be double the markup.
So you get $75,000. So in 2 weeks, we have your money back in the bank account. That makes sense?
Yeah.
All right. How about some feedback? What do you guys think? What did you guys see there? Point it out. What did you guys see?
I liked everything, but my one question was when we saw the full chart and you click that the first checkbox, your sales to ask your gross profit changed dramatically, and I wasn't really clear on that. Did it really change, or did we just hone in on it?
No, it didn't change. See, it's 2.5 million. It just changes the scale. It's still 2.5 million. It just changes the scale because my whole theory about working with a client is I want you to clear the noise. When you provide somebody with these big dashboards and these wall of numbers, there's too many things for them to look at. So the way I built all my charts is I want you to focus on the things that I think are important. Me as the advisor, you got autonomy. You're telling me, like, how did we end up on inventory? Which one of us went to inventory? It was Jeff, right?
Yeah, he did. Yeah.
Yeah, Jeff did, because I turned this off, I turned that off. I said, hey, this is a small problem, and I gave him a choice, right?
Right.
Who really guided? I don't care if we work on this one or this one, but if he makes the choice, he says it out loud. He's responsible. He owns it, and
He bought it,
and he's more willing to help you with it.
Yeah. No, I thought it was fantastic the way the scale changes too. I mean, it's very visual, and I'm a visual person, so like I was like, it just seemed like dramatic when we took off the I think when you took off the gross profit, not the gross profit one, but you took off the income one, and everything changed. It does like crystallize what the challenges are. I liked it.
Yeah.
Can I make a clarification? If you have everything unchecked, so you see all of the if you see all of the boxes, look at the hidden cash up in the right hand corner, 13.8 million. But that includes sales to asset, which you're going to turn that one off, and you're going to turn off what they're doing good, which is operating expense, and also the AP turnover. Look what happens to the hidden cash number.
Right. You're honing in on where we need to really address. That's what that was the dramatic part.
Yeah.
Turning off that the operating expense one because he's doing good there, and that just made everything crystallize to me at least.
There you got it. So, well, good. Nice job, Jeff. Who's got another scenario? Who wants to go through it? Jody, you're in. You're like chomping at the bit.
Am I?
No, I don't know.
I do. I mean, I have lots of questions. One it's at the top of my mind is I have a client who recently had a valuation done by like an outside company because she wants to sell.
Yeah.
And they basically told her it's worth nothing. So what could I do?
Do you have their number?
Look at that?
Yeah.
Yeah.
Okay.
I have her numbers. You want to look at it?
Well, good. So the way I get there is that there's got to be some burning issue, right? So if you guys didn't point out, nobody put it in chat. When I was talking to Jeff, I used 2 of the techniques that are in the book. Don't tell me what to do, right? 2 of these techniques. I use clear the noise, right? Hey, what's going on? How was you hoping that could help? That's clearing the noise. It lets somebody get something off their chest right up front. The second part of it is
The
the
compass.
explorer, right? The explorer is when I said,
Say
hey,
it differently.
what is it?
Yeah. You say it differently.
Say it differently, or hey, tell me more about that. What do you mean? Because remember, I don't know if it's a profit or if it's a cash flow problem. So I say something like, hey, tell me more about that. What do you mean by this? And that's the 2 techniques. And believe it or not, it seems like just a regular conversation, but it is a planned event. I know what I'm doing next if I can't find it. Every question I ask, there's only 2 outcomes. Don, Odell, what are they? 2 outcomes. Every question. You're on mute, buddy.
You find the answer or you don't.
You find the burning issue or you don't. If I find the burning issue, what do?
Solve it.
I go work on that. If I don't find the burning issue, then what do?
Ask another question.
That's the next question in the sequence, right? There you go. All right, very cool. So, Jody, are we role playing or what do you want to do here? Do you want to just go through and put the numbers in and see what it is?
Sure, we can do that. I tried hooking it up to the app and I like locked out of the app again. So I can give you the numbers.
Why do you keep breaking the app?
I don't know, because I'm in Canada.
Hey, Mike, I wanted to add, along with this too, as you're touching on this, I had a question submitted as well of, I wanted to sell my business in the next 3 years. How do I know if it's actually worth anything without me in it? So these two questions will coattail along the same way, I feel like.
Okay. All right, let's, when is what is the date of the period that you have? What's the?
Why don't we run like a full fiscal? So Feb 2024 to January 2025.
All right, 01. Is it 31/2025? Oops.
It would be Jan 31, 2025.
What is going on here? All right, and it's a year, right? So
In January, sorry.
January, not February.
Yeah.
yeah. All right, cool. So Jody's valuation. Now I'm going to go over here. We're just going to do the valuation. You realize with this app, I can do all the calculations by typing them all in. I can do just an individual calculation. So we're just going to go here. So I just need 9 numbers. All right.
Sure.
Are there any depreciation expense? Oh, wait a second. I'm going to need more because I don't know your EBITDA. This assumes we already know the EBITDA. Oh, no, it'll work. It'll work. Go ahead. What's depreciation?
$650.
Okay. What's the amortization?
0.
Okay. Interest expense?
There's no interest.
Okay. All right. Do you see how these are changing to blue and they're red? Red means it's missing to do this calculation. Blue means I manually entered it. If it's white, that means it got pulled, like from QuickBooks, or it got pulled from another period. So taxes paid, probably none.
Yeah. Well, small amount, 1,329.
Okay, these are income taxes. Is that true?
Yeah.
Okay.
Yeah.
1,329. Okay.
Yeah.
Net profit before tax.
2,364 plus 1,329. It would be 11,693.
Okay. And family excess or seller?
0.
So they don't take anything out personally that, okay, cool.
No.
All right. Do they have any long-term debt?
No.
All right. Do they have any equity? Anything in equity?
Let me just flip over to the balance sheet a second. Total equity is 86,912.
Okay. And capital expenditures are, did they buy anything this last year?
Nothing.
Okay.
Nothing. Here's a quick question. The owner, she pulls out like dividends and not T Ford wage.
So are you Canadian?
Yeah.
I was like, I didn't know that. Yeah. So meaning that, okay, so she took her money directly from equity. She didn't pay herself.
Correct.
All right. All right.
So like in that net profit number I gave you,
yeah,
that would be like her not paying herself anything.
Okay. So it's probably negative profit and loss, right? Because somebody's going to try to pay themselves something. How much did she pay herself?
Yeah. Oh, I don't actually know if she took, what did she take out last year? Let me take a peek here. And this is like from a Canadian perspective, because I don't know if we're like slightly different, but a lot of companies, they won't, if I look at their EBITDA, it might not factor in the owner's wages. So would you suggest me like subtracting the owner's wages from the number to give me a truer EBITDA number?
You can, but I mean, this is a really small company, right? So that's going to,
Really small. Yeah.
and probably why somebody says it's
Not worth anything.
worth anything is because this number would be negative.
Negative.
So
Yeah.
here's what you do when you have negative EBITDA. You use
Okay.
book value of the company. So book value is total assets minus total liabilities, which is equity. That is the book value of the company. So at a minimum, I would think it would be worth $86,000.
Okay. And it's a retail business, so that would include any inventory on hand, correct?
In this case, it's because it's all assets. We take all the assets and pay off all the liabilities, and this is what's left over. Now, in her case, what I would do, okay, so if you watch my video on simple valuation, I talk about two different ways to value a company, right?
Yeah.
One of them is the asset approach. The other one is the earnings approach. The reason why I do the asset approach is because I want you to be able to negotiate specific things. So in this case, I might ask for $86,000 or $100,000 for the business, but then also make you buy the inventory, right?
Okay.
Right. So that would be a way that we would put it up for sale, and you would have to negotiate with me to not buy the inventory, right? And like, well, why would you want a retail business without inventory? Or I would sell it back to you up to 50 cents on the dollar. So I would negotiate that down, like going, okay, well, I'll give it to you for 80 cents on the dollar, you know. But when especially in a business this small, you want to negotiate as many different points as you can. But she can justify it's at least worth $80,000. Just the going concern, because that's the book value of the company.
Okay, cool. That's helpful.
All right. All right.
Mike, wouldn't that also assume that the inventory is worth something? It's not obsolete. It's not last year's stuff. It's not
That's why I
damaged.
pull it out in case they don't want to they don't want to buy it. Right. And that's also why I'm willing to negotiate it down to about 50 cents on the dollar, because somebody will take it. I don't care if it's old or obsolete. If they think they can get it for 50 cents on the dollar, they go, hey, I can put this on clearance and make a few dollars on it. Right.
Plus, they need something to get started.
Yeah. Yeah. So, all right. Questions on that? Comments? Jody, is that helpful? Hurtful?
Yeah, very helpful. Thank you.
Who's next? Anybody next? We got more time.
Mike, can you share a little bit about the Client Conversation Coach, which is your newest module, and how it tracks along with the Don't Tell Me What to Say?
Hey, Mike, I might have a question along that. Larry, this is the call-in cash flow Mike show. So next time, come with a question. Put that in the form of a question, Larry.
What are we playing, Jeopardy now?
Hey, here, see if this doesn't coattail in with that. I want to offer advisory services, but I'm worried clients will ask questions I can't answer. How do I build the confidence to lead the conversations? Larry, does that kind of encompass what you were thinking?
Kind of, sort of.
All right. So I wrote the book, Don't Tell Me What to Do, right? Which is really funny because here at home, I used to say that all the time. Say, hey, don't tell me what to do. She'll go, hey, can you take out the trash? Can you go mow the yard? I'm like, oh, don't tell me what to do. Now I can say, hey, I literally wrote the book on Don't Tell Me What to Do. So it's one of those things. It's great to back that up. But here's what I built into the app. I mean, in the memberships that it has the Client Conversation Coach, where I teach all of these techniques, but here's your cheat sheet. Here's your crutch. It's like an AI chatbot that knows this, right? That knows this book. So the thing is, remember I told you in the very beginning of this live that depending on who I'm talking to, I start the conversation in different places. right? So let's just say that Jeff, in your question, was it a current client, a new client, a sales prospect? Who was it?
Hey, Mike, why don't you do that original question that he had and show how to do it within using the app?
Jeff, what was the question?
This one's just someone who wants to kind of expand in what we're doing.
No, the question is he didn't know if it was profit or cash flow. You said say that another way. You're trying to narrow it down. Show how you could do it here. That would be pretty cool.
All right. So let's just say we're working together. We'll say that. We're working together. I click on that, and this is like a cheat sheet. You don't have to show this to the client, right? This is like going, hey, first thing we're going to do is we're going to clear the noise, right? Try asking something like this, like, wait, what's going on in your world lately? Or how'd you think I could help? Or what's been keeping you up at night? You know, something like that, just to get the conversation started. But there's a purpose for that type of question, is to get them to say something. And then what you do is you listen for them to say any of these issues. These, over the last 15 years, I've been trying to track what people tell me. And these are the most common 12 things that people say. Does that make sense? Now, do you think your client's going to say exactly this? Probably not, but it's going to be in the bucket, right? And that's what we're trying to do, is when they say something, I'm trying to put you in a bucket that I call burning issues. And these burning issues, there's only 6 of them. Most business problems can be put into one of 6 buckets. It's cash flow, it's profit, it's education, it's debt, it's operations, or the future. That's the ones. And if I can put you in a bucket, I know how to solve it with one of the techniques I teach in the dumb book, or the clear path to cash. So Jeff, you say something. Just, it doesn't matter what you say, just say something. Hey, what's going on in your world, Jeff?
You know, I guess probably the easiest thing is I don't understand my numbers.
Okay, well, you didn't have to read it.
I wasn't quite prepared for the role play either, so I was just reading off there to get my brain going.
Hey, Larry, come up with just a statement, and don't try to read this, because this is something I'm going to do to help everybody on the call understand how I do this. So, Larry, what's going on in your world? Just make something up.
Oh man, just working my butt off, just like always, man.
Okay, so I'm going to stop here and go, did we hear one of these things? Working my butt off. Did you hear a burning issue? Okay, probably not. So what I would say, I can't really tell what he's talking about there. So I would go none of these, or I can't tell. And if that's true, and say, okay, well, try this. Try to tell me more. Can you say that differently? Hey, Larry, tell me more about that. What's got you working your butt off right now? What's happening?
Oh man, just working a lot of overtime, and I keep getting these financial statements from my accountant. He always, I just don't know what they're trying to say. I'm an electrician. I don't know about this running the business and doing all the accounting stuff. That's what I pay my accountant for. But I just don't understand what's going on.
Got it. All right. So I'm stopping out a role play real quick. Did we hear one of these things? Mark, which one? You're nodding yes. Which one?
I don't understand my numbers.
All right, so I click on that because it's close, right? He's saying, hey, I don't understand. I keep getting these reports. I don't know what they're telling me. And what I'm going to say is, hey, you just identified an education problem. With an education problem, I want you to use the home run financial system or the financial doctor, right? Now, who knows what the home run financial system is? What's the more common name for that?
7-minute conversation.
7-minute conversation, right? It's the home run financial system is what I call it, because it touches all the bases. It's a little bit from the income statement. It's a little bit from the balance sheet, and a little bit from the cash flow statement, all in one. And you can do it in about 7 minutes, right? That's why I call it the 7-minute conversation. I'll teach you more about a business in 7 minutes than they'll know in 10 years of running it, right? So if I go to the home run financial system, I don't even have to. I can just click this. You see how there's a line on it and how the cursor changes. I click on that, and it's going to open up the 7-minute conversation for me, right? And the 7-minute conversation is about changes. So we got changes. There it is. So I'm starting to talk about, and that's a bug that came out this weekend that we're fixing. But you're going to have the charts here, and I can turn those on and off, you know, just like everything else I can. It's not doing it because the chart has a bug. But I'm going to say, hey, listen, the analysis is still here. This is still here, right? Just the chart's goofy. So what it's saying, hey, listen, let me show you how to use your financial statements a little bit better, right? I've got this technique I call the home run financial system, right? And it takes a little bit from all these things. So before you leave today, I'm just going to kind of show you what's going on. So in this case, I'm going to look at the trends, right? Every time somebody throws some financial statements down to somebody, they always look at the trends. Is sales up? Is it down? Is it, how much did I make versus last year? Those type of things. But we all look at those things. Well, this is just doing that for us. It analyzes it for us and says, hey, sales are down $1 million, gross profits down about 500,000, operating expenses down 400,000, net profits down 100,000. That makes sense, Larry, in your company? You see where I got that?
That's pretty much it. Although my screen's all messed up, what I'm seeing is not good. I don't know if you know that or not.
Now, you know what happened? It opened. All right, so this is
screen
something new.
redraw.
No, this is something new that we put in. I made a desktop app of the Clear Path to Cash. So I opened the desktop app and you guys are watching the other one, the web browser. All right, here we go. I'll go back to this. We'll go over to home run. Boom, da boom. There it is. All right, so now this is the home run financial system. See how we're down $1 million, down this. So sales are down, right? If it feels like it's worse, did you expect that? This is over the last 5 years. I mean, did you expect sales to be down?
Talking to me?
There it is.
Yeah, they've been down a little bit. The phone hasn't been ringing quite as much, and we lost one of our salespersons. But yeah, that's probably about right. I don't know if it's exactly that amount, but yeah, it did go down.
All right, so remember this, that I'm going to ask, did I expect it, and is it good or bad? So to you, this is probably bad, right? Nobody wants to lose $1 million in sales. Gross profit is the amount of money we have to spend, and if it feels like money's tighter, well, you got $500,000 less to spend. Make sense?
Because we sold less.
Yeah, these two pretty much move together, right? If I'm pricing things pretty consistently, they'll move together. Here's something good, right? This is down. Operating expenses down. This takes a manager's decision, yours, to go, hey, we got to cut expenses. So you saw your sales are coming down. You saw the gross profits coming down, and you cut expenses. That's pretty good. So I want to, you recognize that. That's one of the good things you did here. But the result was you lost over the last 5 years $100,000 in profit. You're down. What you used to make 5 years ago to what you make today is $100,000 less. So that's a big chunk, right? That's a big chunk of change.
That's terrible.
Yeah. So this is what I do for you. In all of these charts, I do the analysis for you. Like, hey, things aren't looking good here. You may have cut enough expenses, but you need more sales, right? When it comes right down to it. How do I get to this analysis? I look at these 4 arrows, right? Down, 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 down. It could be, what if sales was down, but gross profit was up? What would be different there?
That's good.
Yeah, I don't know what we're doing, but we're doing less work and making more money, making more cash. So that's why you get a different analysis based on what these arrows say, because everything works, remember, together. And there's a cause and effect relationship to everything. So that's what I look at, not just silos. All right. So that's one thing. Now, expense control. Larry, this is the thing that's going to put you back in the black, right? Expense control is when you have less money to spend, you should
spend less money.
Less money, right? And this is saying you have $500,000 less to spend, and you did spend less money, $400,000. But the difference is you're still paying $100,000 to go to work, right? We need to cut. That's really what this is saying, that you're paying your company $100,000 to work there. Are you okay with that?
Not really. Maybe that's why I'm busting my ass.
Yeah, because this used to be in your pocket, right? Now you pay that, on an ongoing basis to just work there. Now, here's what I would say. We need to cut $120,000. Seems like a big number, but it's about $10,000 a month, right? You're doing, whatever it was, 8 million or whatever in sales. Yeah, you're doing 9 million in sales or so, 8 million in sales. So
yeah. I want to look at advertising because our sales are down. We're spending a bunch of money on advertising. I don't know if it's working or not, but that would be the first place I'd want to look, I think.
let me do this. Let me go ahead and put an action there. Gather. When do you think you could have that done?
Probably by next week. I'll probably be doing it this weekend because I don't have time during the week.
All right. So next week, probably Friday.
Yeah.
So I'm gonna put that there. And we're doing this because we are trying to optimize cash, right?
Or cost reduction.
Cost reduction. There you go. All right. So what I did is I just made a little thing for you, right? Just remember what we just talked about. You said we can probably look at advertising. I just didn't want to lose that data because when we do the action law report, it's going to give us all the stuff we have to go do, right? So we got that down already. Now, debt to equity. Do you think next year that you're going to need to buy something to grow? Like, do you need a new truck? Do you need a new piece of equipment? Do you need anything?
Yeah, one of our trucks is kind of on its last legs because sales have been down. We've kind of been doing some repairs and maintenance, but that's getting pretty damn expensive. We're probably got to. It's probably gonna make more sense to go ahead and buy a new vehicle.
All right, so that makes a lot of sense, right? Because right now we should start looking at this debt to equity ratio, and you don't have a problem. You're doing great. We want this number to be 2.5 or less, and you're at 1.45, which means we're in good shape to probably get another long-term loan, right? For the vehicle, like 4, 5, 6 years, whatever you're going to pay it on. Make sense? So
Sounds good.
doing good there. And what I would do is in the notes say, hey, listen, let's talk about the vehicle in February or whenever we want to talk about it. I would put that in the notes. Then EBITDA, this is the amount of real cash that comes through your money, right? Most people don't look at their EBITDA. Nobody calls me up and says, hey, what's my EBITDA this week? But this is real cash coming through the company, right? Bankers use this as a substitute word for cash flow. And right now you've got about $540,000 coming through, right? In real cash that, we can use for other things. The way I want you and I to use it is this tells us about how much we can borrow on a long-term debt basis. Instead of going into the bank and going, hey, I don't know how much I can borrow, how much will you give me? We're going to go in there with a number. Like I need a $100,000 vehicle loan, or I need, an $800,000 building or whatever that is. We know that the bank will probably give us about $900,000. That's about the limit. Does it make sense?
Yeah.
So your vehicle is not going to be anywhere close to that, but at least if you want to grow in the future, this is about how much we can borrow, right? So if you want to buy $1 million building, we got to come up with about $100,000 down or more. Make sense?
Yes.
All right. Then what I always look for is this thing called mismatch financing. So what this is you using the wrong loan product to buy something. And this shows me that you did that, right? It's like buying a house with a credit card. I mean, nobody's going to do that because 29% interest versus 7% mortgage, right? It sucks money out of your company in the form of cash. So right now, this is showing that we bought something with the wrong product, right? What'd you buy last year?
We had to replace the air conditioner. That was a big thing. The air conditioner, that was.
All right. So and the one on the roof, right? The big one that they have to crank.
Yeah. Oh yeah. Oh yeah.
All right. So if that's the case, how'd you pay for that? You
I
remember?
just put on my line of credit.
Oh yeah. See, so line of credit is short term, right? It's supposed to be
Oh
paid off.
really?
Yeah, it's short term stuff. What's
My
really cool?
CPA never told me that, man.
Well, it's okay. I mean, they're probably busy. They save you in taxes, right?
Yeah.
Here's what I think we can do, because I don't know what the line of credit interest is, but I want to talk to a bank about moving it off your line of credit so you can use that for inventory and your other stuff onto just a term loan. We're not adding debt. We're just moving it from a 14, 15% loan to a 10% loan or a 7% loan. We're going to try to save you some money on your payment, right? While you're paying that off. But this is just showing us that it happened. We need to correct it because it's going to put more cash in your pocket. You okay with that? I'll put an action here for us to meet with the bank.
If it's a term loan, does that mean I don't have to pay it anymore? It's terminated?
No, term loan means over the course of the term, right? So,
Oh, okay.
I mean, over the course of just, if it's a 5-year loan, that's the term. It's 5 years is the whole term.
Okay.
Yeah,
Okay.
I like how you thought though, because some people say, I'm going to term out your line of credit. Well, if you term out a line of credit, that really means you're converting the balance into a term loan. That's all it means. It doesn't mean they're ending it. It doesn't mean they're yanking it or taking it away from you. It just means they're converting the balance into a term loan. Right. All right.
Okay, thanks for the clarification.
Yeah. So, and then the last one, this is kind of the tattletale, right? So you and I talk, you tell me stories about what's happening in the business. This is my kind of check value, like on what's happening. And basically it's plus, plus, plus. These are the three things I look at, plus, plus, plus. And this is saying, hey, you're making money from the operation and you're selling your assets is basically what this is saying. You're selling your assets because money came in. So I got to figure out what you sold off. And then you also had money come in from financing. Maybe you put a cash in yourself or whatever that is. But this is saying, hey, companies using cash from operations and from the sale of assets and from financing to pile up cash, right? It's a very liquid company. It's possibly looking for an acquisition. Is that you?
No, I'm not looking for any acquisitions, perhaps to be acquired if I can get the right price.
Yeah. Well, this is just saying that what you're doing, the actions you're taking, that's what people normally do before they look to sell, right? Is to pile up a bunch of cash and make the company look super healthy. So no worries there. It's good to have cash. Good to have cash. So
Cash is king.
so that's it. That's a 7-minute conversation. And I'm telling you that most advisors don't have that type of conversation with their clients. They just don't. So questions, comments, concerns, moans, groans, gripes, complaints, otherwise. What's up, Sue?
Hey, yeah, that was everything I learned. It just blows my mind because the only thing I learned is how much I don't know.
That's why you keep coming back, right? I mean,
Yeah, keep coming back. Yeah, you can't get rid of me.
It's a process.
Yeah, nobody talks about that ever.
No.
I think certain people want to hear it, but nobody talks about it.
Yeah, got it. All right,
Important
so
conversation.
I'm going to make this available if anybody wants to rewatch the recording. We did record this. Jeff will put it out there for everybody to grab. Any final thoughts? I've got a meeting at 1, but any final thoughts before I jump?
Hey, Mike, I have a question for you. So, don't tell me what to do. Do you take out the trash?
I do. I'm the only one that takes out trash in this house. I mow my own yard. I do all that stuff, right? So very cool. Anyway, is this something I should do on a regular basis?
Oh, you bet. You
This is
bet.
good.
Yeah, very good.
All right, it's a little different than the course or the coaching that we